January 2nd, 2023. Nathan from Queens, Ultimate Traders on Reddit. I'm going to hit you guys off with 3 different videos today. And this first video, I'm sorry guys, it's going to be pretty long, but keep in mind, I'm not a journalist. I'm not an author. I'm not an analyst. I am an actual trader on the front lines like a general in the army. I'm not like a money manager or a mutual fund manager or even some type of guy that comes on CNBC and speaks his mind every day. Because those guys, it's almost like watching the battle and not being on the front lines. Instead, I'm actually on the front lines, and I've been trading since the late 1994. So it's almost 30 years that I've been trading. And you guys are getting this for free. So if you want to fast forward some things, go ahead and fast forward some things. So this first video is going to be a recap of 2022. I'm going to talk about a little things about the market. I'm going to get into some things that you want to do, some things to help improve everyone. I'm going to go through some experiences that I had with trading in 2022, and hopefully we get a much better 2023. Okay, so don't be too hard on yourselves for 2022. Keep in mind the S&P 500 was down close to 20%. The NASDAQ was down 33%. And the Dow Jones was down almost 10%. So when you want to measure the market, a lot of people go by the S&P 500. The S&P 500 has 500 different companies where it's considered they go with the economy of the United States. So if the S&P 500 was down 20% and you were down 15%, you actually did a lot better than the market by 5%. So don't be too hard on yourselves. And if you did well this year, if you were actually up this year and you want to turn off this video, skip to video 2, skip to video 3, go on, be my guest. I'm here to try to help everyone out here and see if we can move along. So in 2022, I didn't do that well either. I was up maybe about 25%, maybe 23, about 23, actually about 25%. But the thing is, in 2022, I didn't really go too heavy in the market. So I actually didn't trade as much. I was mostly buying put options. So that's going short against the market without having to put so much capital. So when you're shorting a stock or you're buying a stock, when you want to own it, you're committing the capital, the complete capital, to own the stock. So the difference is with the option has a date where you have to be pretty accurate. Otherwise, it's possible that you could lose the entire bet. And I'll go through that. So instead of shorting stocks, which I haven't shorted since Tesla in 2014, I did puts. So in October of 2022, in October of 2021, I felt that the market was overdone. I saw DWAC go from 10 to 175 in 3 days. I saw a fund go from 2 to 24 in the same day with DWAC. And I saw a mark go from 1 to 7. Those were signs. I saw a lot of people buying property in the metaverse. And finally, SFT Shift grew sales at 200%. It was like the 3rd or 4th week of October. And instead of being up on 200% growth, the market, it was up at first and was closed down about 10%. So that was a sign to me that, hey, we got to hold up. The market all of a sudden doesn't like growth, and growth is at 200%. We gotta stay alert and back off. So one thing that we have to know is that From 1957, the S&P 500 inception has been up about 8% year over year, 8-9%. So we must be bullish long term, but once every 12, 13 years, we have to read the signs, be alert, and it's going to be a bear market. So in a normal market, I stopped trading options in 2017. Before 2017, I was mainly doing stocks. Like in a normal market, I would do maybe 80 or 90% stocks, 10 or 20% options. And when I did options, 80% were calls, 20% were puts. In 2022, I did like 95% puts or 97% puts and 1 or 2% options. What I did in October through the beginning of this year, I instead of buying just one put, I would buy a whole bunch of different puts. I was trading between $2,000 and $3,000 a put, and I held as many as 50 puts in the beginning of February, late January, because right before the war, everything was hitting. The market was coming off big time. So that's why I was doing that. I'm going to go into that in one moment. I just want to let you all know that, I do whatever I can, and this is mainly for you guys. It's not for me. I don't mind if this is shared with analysts. I want to be shared with a whole bunch of different people. What I hope that everybody understands now, I've been warning the whole year. And if you take a look at my videos on January 8th of 2022, the very first week, at the end of the very first week, I already warned that the NASDAQ was going to be down 30% and S&P 500 was probably not going to be good. Why? Because I already knew that we were way too high. Before earnings on the S&P 500 were out, we were trading at 26, 27 times earnings on the S&P. S&P 500 trades normally at 18 times earnings, and we were trading at 26, 27 times earnings. That's not normal. Those are already signs that something is not right. Given during 2020, everything was closed down. We had earnings on S&P 500 in the beginning. I think about $110 on S&P 500, and it rose actually to a record in 2021 of $208 for the S&P 500. Why that's important is because we were set up to make record highs, not to have S&P 500 at 25, 26, 27 times earning, but we were set up for a super rally in 2021, so we take advantage. We had interest rates at 0.125. We had $6-7 trillion in the Fed that pumped in, people staying at home, commission-free trading. So the setup was there. 85% of companies were beating. More than 80, like 99% of companies were beating, and like 90% of companies were getting an 85 score, like the first, second, and third quarter of 2021. So we were set up. So I want people to recognize that. I also hope that people now understand that, it's not okay to see that, the Elon Musk, because he was the most valuable guy in the world, that whatever he does is the right thing. Today, January 2nd of 2023, Tesla came in delivering 1.31 million vehicles for the year. They delivered 420,000 for the quarter. January 1st of 2022, the estimate was 1.4 million vehicles. And at that time, Tesla was supposed to deliver 450,000 vehicles, and today they deliver 420. What that means and why that's important is because Tesla was growing at 80 or 90%. The fact that they went from 936,000 vehicles to 1.3 million vehicles means instead of growing 80 or 90%, it's growing at 40%. And why that's a concern is next year, I don't know whether or not they're going to grow at 40%. So it's not just what's happening now. Mind you, Tesla missed all four quarters of 2022. So what do you want with that deliveries? They're gonna have earnings 3 weeks from now, and you're gonna go see. So what that means is don't just listen to a CEO, CFO, or a TV analyst. Do some DD right here. Because come on. The guy is like the number one pumper in the world, and the stock is cratering down 70%. And I'm not so sure that I even has $100 fair value, which is what I had before. Even last night, January 1st of 2023, there's people defending Adam Aron. Adam Aron has been the CEO of AMC since 2015. He's made 2019, 20, and 21, and now 22 close to 150 or 175 million dollars in the form of bonuses and stock sale. So since 2015, Adam has made close to $200 million, and most of that money has been post-pandemic. So what does that tell you? Stop making excuses for the guy. Okay, so on Reddit, I wrote the recap Saturday morning. I spent about 4 hours, and some of the things that I hate the most is being lied to. Number one, being lied to, making us all believe that, like I said, like AMC is doing great. The cat is out of the bag. It's obvious. People thinking that Ryan Cohen is a brilliant guy. Come on. Here we are now. It's, what is it, $18? I'm telling you, $250 is pretty high for GameStop. Why is that? I'm not confident it's worth $750 million. According to the stock price, you take the stock price, it's at $6.5 billion. When GameStop was a company that made money and gave dividends, it was worth $1 billion. So now that is not a company, why is it worth $6 billion? We gotta wake up. We gotta stop listening to these people, and we gotta move forward. And another thing, I'm doing this, guys, to help you out. Believe it or not, me doing all these things, I'm one of the most hated people on Reddit. If I wasn't banned in all the different subs, I would probably be the most hated guy in Reddit. I am the guy in March of 2021 when Kathy Wood was hitting the super highs that said that she's delusional, that she needs help. And now ARK went from 160 to 30 and is probably headed lower than 25. You heard it here. She's not woken up. She needs to research Janus 20, and I've told her many times she needs to research Janus 20. I'm the guy that when Tesla was over $1,200, told everyone this is a shill company worth $250, $300. Now it's $350, $360 post split, but no one liked that. I'm the guy that told you that Ader is garbage, Be Big is garbage, Apron is garbage, CEI is garbage, and I apologize because it's going up. Retail likes it, and they hate like anyone that goes in. But what you also need to understand is if you're doing this a long time, like for me, I want people to give me an opposing opinion. I was on Seeking Alpha the first time I made a comment on Seeking Alpha in over 4 years because someone had very good DD on Zim. I thanked the person for a very good DD on Zim. I need to go back and see the other comments on that specific article. I just don't want people to oppose my opinion and say, oh, GameStop is going to go up because it's short. GameStop is going to go up because they're going to make money in the future. And then you want to tell me they're going to make money in the future because Ryan Cohen or because NFTs. I will tell you that Ryan Cohen is as bright as a stone. And I hope he sees this. I understand he came out with a great idea. He went out there and did Chewy, and he sold Chewy to someone else. So for that, he was great. It doesn't mean that anything beyond that is great. Okay? And people thinking that Elon Musk is a god. I don't know Elon Musk, obviously. So I can't even say that he's not intelligent. I don't know. But that doesn't mean that I'm going to say that he is intelligent. That I don't know. What I can tell you, he's a magician. All he does is overpromise and underdeliver. But now I'm going to go into something that I was writing about on Reddit. So, and if you want to look up real inventor, look up Jay Walker. Jay Walker was one of my idols in the 90s. The founder of Priceline and CEO. I like Jay Walker. I like Bernard Eppers with WorldCom. I got scammed the WorldCom. I like John Chambers of Cisco. Oh man, David Weatherall of CMGI. You think Chamath is the man with the SPACs? If David Weatherall and CMGI was still out in the year 2000, what they were a public angel investors, CMGI and ICGE. I spoke to David Weatherall on the phone. I never met him, but I spoke to him on the phone a few different times. That guy was like a god to me. So he would come out with a whole bunch of different IPOs, give you a little bit of the IPOs, and that was a stock. It was a publicly traded venture capitalist firm that would come out with IPOs, man. I love the guy. But Jay Walker, I met Jay Walker in the city quite a few times during the time when I was at Baruch and I was going to market makers' offices and going to the city. So this guy sold me on everything. His ideas, he was an inventor. Elon Musk, I don't know if those are Elon Musk ideas or he pays people to get and gets their good ideas. He might do that because Ray Dalio, if you read Ray Dalio books, Ray Dalio is the father of hedge funds. He's father of hedge funds. He's managing close to $250 billion. Read his books. I've read a few of his books. He actually pays. So whenever he speaks to someone, he thinks that they're amazing, he hires them immediately. And then he has them all debate. He pays people to publicly humiliate each other. But this is where he gets ideas. Then he sits and writes it down. So they're not even his ideas. But that's a great idea. And for all I know, Elon Musk does that. But Jay Walker, the founder of Priceline, laid down everything for marketing, buying, selling online. So, of course, when they came out with Priceline.com, it was airline tickets, it was hotels. But in the 90s, if someone had Priceline and they were trading stocks and they had Priceline, they'll remember. Priceline allowed you to buy groceries from the supermarket. So you can bid on orange juice, bid on milk, bid on cereal. You could bid if you wanted to buy at the C-Town or the Key Food. And whoever would give you the good price, that's where you go. Priceline had a gas card. I wish I had the gas card. It's nostalgic. I might even go on eBay and bid for a Priceline gas card just to have it, just for the memories. Because I used to look up to the guy. I would talk to the guy. He was telling me what would happen on the internet. This guy to me was like a superhero. But remember, I was 18, 19 years old. But this guy was a superhero, a role model. So when the whole market was crashing in the year 2000, everything was crashing bad. I bought 1,000 shares of Priceline at 85. A couple days later, I think I bought it in late 1999 and held it, unfortunately, in late 1999. And I didn't sell it at 103, so I was up $18,000. I ended up selling in spring of 2000 at $9. So I lost $76,000. I don't know exactly when after, because after I sold everything. I took a little break, but I spoke to him. I met him and spoke to him one last time. He apologized to me. I was a wreck. I was really bad. I blew up my account. I was down like 75%. I sold everything. I was angry at everyone, angry at the market. And then after I spoke to him, I was even more mad. So I was a kid. I felt like, hey, this guy's like a superhero. I spoke to him many times. I met him a few times. That, if he felt like I felt we were friends, like he would warn me and say, things are not looking good. Let's go. Let's bail. So I have a conversation with him, and he basically told me that, kid, I'm extremely sorry. I'm extremely sorry. What we do as CEOs, we don't know what the stock market is going to do. We invent, we have great ideas, we sell the street hope, we give the street dreams, we make it seem like things are going to go through the roof. And when we do that, when we're a good salesman, the stock goes up. When the stock goes to a price that I feel is too high from what I believe it should be, I sell. My first investors, the big stakeholders that own 10% of the company, 20% of the company, they sell. The people that brought us public, they sell. I'm sorry, it has nothing to do with me. The market boomed up the stock. I got out, my family got out, everyone that was important got out, and you're left holding the bag, and I'm sorry, is basically how that conversation went. When that happened, it clicked to me. Like, I always kind of knew, and that's why I made a video about that the stock market will never, ever change. But at that moment, that's when it clicked. Like, these guys are not out to help you or me. A company goes public so they can access money from you guys. Not for you, not for me, not for us. But when he said that to me, it dawned on me. I was so mad. It took me a little bit of time to come back in the market. But that's a big thing about FOMO. And I also wrote on Reddit, the very first CEO I spoke to was with NetBank. The funny thing is, this is 1997 or 98. I spoke to him at NetBank. At that time, no one was doing online banking. People were going with cash. I think right now, cash is like 9 or 10% of actual money out there. Everything else is zeros, X's, and ones and zeros. Everything is digital. But in the 90s, I think 90% was cash and 10% was zeros and ones. This is 1996, 97. But he was telling me a time when you would be able to deposit checks online. They didn't talk about on the phone, but online. You're going to be able to transfer money online right away. That everyone was going to go online and you didn't need to have brick and mortar storefronts. He was telling me so many amazing things that would happen. But NetBank went out of business before that would happen. And why that's important is they paved the way. They put out these great ideas. The stock booms. Other new guys eventually IPO and they take from those ideas and they benefit from it. So FOMO. Got to be careful from FOMO. So anything that we learned in 2022, and I warned in 2021, towards the end when things were going bad, I warned, if anything that we learned, do not have FOMO. Do some DD. I'm sorry if this is too long, but like I said, I'm not even charging anyone. I don't even want to charge anyone. You have to realize something. So I did contact Muddy Waters. Muddy Waters is a hedge fund. They had a position for 500,000, and I'll just go through that. So a money manager is like a mutual fund manager. They're always buying stocks, and they're like always in 90% stocks, 10% bonds, but they're almost fully invested. That's a mutual fund or money manager. A hedge fund manager might be in the sidelines. They'll buy options. They'll short. They'll do a lot of different things. The money manager handles a lot of pensions, a lot of people in retirements, a lot of workers and 401ks. That's what a money manager handles. A hedge fund manager takes more risk, and a hedge fund manager usually has accounts of people that have 25,000 or 50,000. Right now, Ray Dalio, if he opens up a new account, you have to have $100 million. So not before, but if you want to have a new account with Ray Dalio, you need $100 million. Otherwise, he doesn't even want to see you. A hedge fund manager usually charges like 10% fees or 15% fees of what you are up. A money manager, like a mutual fund manager, they charge like a 1%, 0.75%, 2% fee of whatever's invested. So up or down, they take a fee. So when I say to people that, I'm trying to get an opportunity for 500,000, 500,000 is actually good money for me. It's good money for a lot of you, but it's nothing for them. Nothing. Think about it this way. Tesla right now has lost $900 billion. Tesla was $1.25 trillion, and now it's like under 400 billion, and it's headed lower. So think of what value I would have to someone that owned a lot of Tesla. In fact, Leo Kwagwan, he has 24 million shares of Tesla. On October 15th, and you can check my Twitter, he retweeted my video roasting Elon Musk. On October 15th, Tesla was almost $250. So to be honest with you, when the third largest shareholder of Tesla, 24 million shares of Tesla, retweets me saying bad things about Tesla and roasting Elon Musk, I'm thinking I've gained a lot of traction. I don't think he sold anything. So is that $125 ahead more from when he retweeted my tweet October 15th. So 125, 23 million. Had he listened to me, he would have saved $2.5 billion. So is that worth $500,000? It's worth $500,000 to the right person. Kathy Wood lost $50 billion of the money she's managing, other people's money, in 2022. Not exactly, but close to $50 billion. What is sad, she's managing over $20 billion right now, I think low 20s, and she's getting $200 million in management fees for losing people $50 billion. And you think that I'm asking for too much for 500,000? Let's go to Gabe Plotkin, because I feel really, really, really sorry for Gabe Plotkin, who's the founder of Melvin Management that had closed down. They lost approximately $8 billion on game short. So, like I said in the beginning of this video, I'm on the floor in the field trading. I'm watching the war with you. I've been watching the war ever since I was a kid. This guy, Gabe, is definitely not watching the war. He's shorting GameStop, doubling down. When it goes higher, he's shorting. He's not saying what's going on. He's probably busy talking to big clients or marketing or saying he's the best or doing speeches. I don't know what he's doing. He's definitely not on the ground. Because if you're on the ground, and I even do this for stocks where I have options of just $2,000, like Chipotle, and this guy has billions of dollars. If I had billions of dollars, I want to know who is making money, why, and how. I would check gamma squeezes, because gamma squeeze is what did AMC, what did Tesla, what did GameStop, what did Avis, which is car. Gamma squeeze is the cause for the massive short squeezes that a lot of people don't know. Now, it's illegal for me to identify a gamma squeeze, tell you all about a gamma squeeze, because you're not supposed to influence stocks. But I can tell you that the gamma squeeze did that. I can also tell you that a gamma squeeze is when options are in the money, someone with a lot of money exercises the options and causes the seller of that option to buy the shares at open market. It's called discovery. So when the seller of the option has to do with discovery, and 85% of options sold are market makers. So when there's no shares available and you force the market maker to buy, to do discovery and buy the open market, the stock goes higher. So if I was at Melvin Management for $500,000, I would identify which market makers are being forced, what to do. I would see the volume. I would see retail. Even if there was no Wall Street bets, if they have that much money in it, someone paid me $500,000, I will find out who is making the money. So when something like that happens, where GameStop goes from under 10 to $600, I would see why, who, what, and how. So if he was so big on GameStop, I understand. I wouldn't keep shorting. I would buy options. And if you see so much retail, so much going on, you know how you made the most money in GameStop or AMC was buying out of the money calls. Because out of the money calls, let's say the stock was $10, you see a whole bunch of retail on. This is how you hedge, because the guy had billions of dollars in GameStop short. And the whole company's worth $6 billion. It's come down. But, when it was bouncing up high, he exited at almost $8 billion loss, taking Melvin Capital out. So if you see the thing, any stock rising like that, you hedge your bet on shorting. You do options. If anything, you buy out of the money calls, because it doesn't cost you much money at all. If the stock is 10 and you're buying $20 calls, because you have $10 away, so you're gonna buy it at pennies. So if you lose, you lose. If you win, it goes from pennies to dollars. So that's gonna hedge your losses of your short position. So if I was at Melvin Capital and I got $500,000, I would have done that for Gabe Plotkin. So he wasn't on the ground saying who was making money, how, what market makers were doing the trade, and the volumes. Who was exercising those options? Those are things that you have to know, like when you're managing and doing that much money. I'm not saying the regular guy should know that, but it doesn't hurt. I mean, if you could identify the gamma squeezes, and I can, I mean, you're well on your way. I feel bad because I was out of options because of 2017, because of Tesla. And, I hurt myself by not doing options. Eventually in October, I decided to start doing options again in the form of puts. I'm sorry to go off on tangents, but now I'm going to go into what I learned. So 2022, from 2021, I carried about 15 bags. 2021, I had, I think, about 3,000 rounds. That means buy, sell, like 3,000. I had approximately 15 stocks that I was still down on. I ended up taking a loss about 13 stocks from 2021 and 2022. I made close to 500 rounds on stocks, maybe 400 rounds. So my amount of trading went down 80-90% on trading, on actual stock. But on puts, I did about 300 puts, and I lost on about 30 puts. My average put was $2,000 to $3,000, so I lost about $70,000 on the puts that expire worthless. And I did all right, on the puts that I made money. Now the reason why, I lost on the puts, and this is a learning thing. That's why we want to learn, because we're all going to make mistakes. It's what we learn from the mistakes that we made. So I started doing puts in October when Dash was 250, when Snow was 400, when SE was 375, when Bill was 250, when Roblox was 250, when Melly, MELY, was 1700, 1800, when Corvana was 165, 175. So what I'm saying is, when you have these stocks at such high prices and they start coming off, naturally, because the prices are so high, it's easier. It's easier that they come down, you're going to make money. Why am I saying that? Because I first started with 2 puts in October. By November or December, I was doing 10 to 20 puts at a time. So I was holding between 10 and 20 puts at a time, and I was only doing 2 to 3 weeks out. The reason why I was doing only 2 to 3 weeks out is my plan was working. I was buying puts with 2 to 3 weeks out of date, and because the stocks were so high, I was hitting right away. I was turning over 3-4 puts a day sometimes. So when January was coming around, instead of 10-20 puts, I did 30 puts. And by February, I had as many as 50 puts. So I had $100,000 in put options. I was carrying 50 different positions because I don't like to bet everything just on black or on the number 7. So I like to get different puts. Like even right now, I have 31 different watch lists, and I'm going to get into that towards the end of the video. I have a list called High Flyers. I have about maybe 150 tickers on there. So I had a whole bunch of those 150 in my plays watch list, and I was just buying puts on everything because everything was super, super duper high. Everything was hitting, and when everything was hitting, I was doing 2 to 3 weeks out. So by February, I'm on fire. Everything is hitting. It's lovely. It is lovely. And then March 20th happens. March 20th happens. I lost on a couple of puts, not a lot, maybe like 2 or 3 puts. But I was like going to the last day when I was doing this 2 or 3 weeks out. I was waiting for the last couple of days to make money. So I started to get scared. So I backed off from 50 puts. I think I had like maybe 30 puts because I was like, hey, you know what? I lost on a few puts and I was getting very close. So around March is when I started to go down to like 30 puts, 30, 35 puts. And then April 14th. April 14th was a nightmare. I was still carrying about 30 puts, but 12 or 13 puts expired worthless on April 14th. So when I had those 12 or 13 puts expire April 14th, and that's going to be with me forever. For as long as I live, I'm going to remember that because that's just how I am. Just like I remember 1999 and 2000. So when that happened, I backed off trading a little bit. I didn't want to hold more than 15 to 20 puts at a time. And I wanted 6 weeks out. Instead of 3 weeks out or 4 weeks out, 6 weeks out. And then we had so many bear market rallies. I was doing 6 to 8 weeks out. Now I'm doing 2 to 3 months because we don't know. Everyone's doing bear market rallies. Maybe now they're going to realize that's video 2, state of the market, but that's what happened. And another problem is in the beginning of the year in October, all these stocks were so high. So naturally, all my stuff was hitting and right away. So when I wanted 25% in a trade on the option, it was hitting. It was not a problem. So I was getting 25%, sometimes even 100%. So that was, I got greedy. And eventually I realized that it's better for me if I make this trade in the next week, within the next week, try to get 20% on the option. If it's after a week, 10 to 20%. And then if it's after like 2-3 weeks, I'll just get my 10% and reset. So that's what I learned. I took about 12 to 13 losses on stocks. And then now we're going to go into what a couple of people asked me and plan for you guys to get better on. I apologize, this video is getting long, but like I said, it's pretty important. I'm not just an analyst, I'm somewhere here on the ground floor. So earnings season is coming in 3 weeks. A lot of people are asking me, how I add, how I find stocks, what I add. So you're all going to go to your watch list. Create a new watch list. Call the watch list Earnings Watch. I actually have a watch list. It's called Earnings Watch. What I do on this Earnings Watch list, I look for stocks when they have earnings to have growth, that's sales growth of at least 20%. I'm looking for bottom line earnings of at least 10%. So when you have companies that do that, if it grew only 10%, you could add it in another watch list, but don't put in earnings watch, because your earnings watch list, you're gonna first you're looking at this quarter. All right, you're putting the symbols in your earnings watch list. They just beat by 20% on sales. They grew 20% in sales. They beat bottom line by 10%. After you compile a lot of tickers, you're going to go back and check the last 2 quarters, the last 3 quarters, the last 4 quarters. And if this new ticker for you is consistently beat 2, 3, or 4 quarters in a row, then you want to have another watch list. I create the watch list as called plays. I use TD Ameritrade Streamer. The TD Ameritrade Streamer allows for a maximum of 300 tickers. So I'll put the best of these new ones for Earnings Watch into plays. I'll watch the stocks, and then I'll decide whether I want to make a trade. Now, this is this is a bear market. So I don't recommend, even if they beat top line and they grew 20% and earnings 10%, they got to be real money makers. But this is just an exercise for you to begin. Now, if a stock grows at 50%, sales grew at 50%, right? Earnings grew at 20%. I don't put in the earnings watch. I immediately put it in plays, and I put on another watch list. I probably already have it. So that's what you want to do. I'm trying to help you guys. So you're going to look, earnings season is coming. Every earnings season, you can be a beginner, but you want to add 10 stocks, this earnings season. Maybe you want to add 25 stocks in the next earnings season, 50 stocks. You can get 100 stocks in the earnings season that grow at 20% and have earnings growth by 10%. We don't know earnings. I don't expect earnings to be very good, but you're going to have at least, let's say 50 companies are going to grow at 20% and have an earnings growth at 10%. So that's to help you guys. All right. So that's what I want to do. The reason why you want to do 20 and 10% because the S&P 500 normally grows at 20% sales, earnings at 10%. And the next thing that people want to know is they want to know like how I know what is hot or what is good. So I'm not looking at the stocks, I'm looking at the sector. So what I might do next year, well, that's now, what I might do this year is I might, like, after a few weeks, make on the weekend like a sector watch, like pay attention to this sector. But I want you guys to do it eventually. I'll do it at first. I might do it, for the first couple of months, but that's something that you guys want to do, So if like this year, oil and energy was hot, oil is actually in energy, but I mean like electric, natural gas, producers, drillers, like all of them, shipping of oil, all of them are hot. Like I'll highlight a sector. When I highlight a sector, like people are asking me, I might put like the 5 companies that I'm looking at in that sector that are hot. And that's what I'm going to do for you guys. But that's something that you guys want to do also. So we're going to see what happens this year because we don't know exactly what's going to be. But in 2021, beginning of 2022, tech was about 40% of the S&P 500. Tech was 40%. But because tech crashed, tech is now 25% of S&P. Energy, I think, started the year at 3 or 4% of the S&P. It's 27 companies. And now it's 7 or 8%. So it grew up because it's market cap weighted. Health was, I think, 7 or 8%. And health is now 13% of the S&P 500. So when the value of tech goes down, the others gain. They have more of a factor in the S&P 500. So we got to see, the S&P I think has 12 or 13 sectors. We're going to see what is hot, what is doing well, and I will highlight for you guys. And then you want to add those symbols and research those symbols. So we're going to see how it goes. But the way it's looking right now, tech is not going to be hot for 2023. And another thing, tech will always come back. It'll take long, but it'll always come back. It doesn't mean that your company will come back, but S&P 500, the tech will come back. Why? Because Elon Musk is a salesman. Jay Walker is a salesman. Bill Gates was once a salesman. Jeff Bezos is a salesman. What that matters is when I tell you you can put 1,000 in my company, 10 years from now, I'm going to grow sales at 2,000%, 5,000%, 10,000%. That's what you want to hear. And because that's what you want to hear, that's why tech is going to be the strongest sector and will always be that way because that's what we want. Banks are never going to be that way because a bank is never going to say we're going to grow sales at 1,000%, 2,000%. Energy is never going to say that. Healthcare is never going to say that. Retail is never going to say that. Only tech can say that because only tech can paint those dreams that are impossible. We will always go into those dreams. So those grenades, those speculation is always going to be there because people are going to want to make a lot of money. So don't worry, tech will come back. It might not come back right now, but it will come back. So what we went over to help you guys, earnings season is coming. You want to add 10, 20, 30, maybe even 50 tickers. They want to be growing faster than the S&P, earning more than the S&P. You want to add it. And then I'm going to put some sectors in a few weeks that are doing hot. And I'm going to highlight 4 or 5 tickers from those sectors so that you guys can watch. So not only will the companies be destroying with the numbers, the stock will go on fire. And what's even better, if the stock doesn't go up at first, all the companies in the sector are destroying and then they take off, like Chevron, like Exxon, like Oxy. All of them What is, yeah, Dino, Sting, all of them were up like 100%, but they didn't take off initially. The companies were executing, if you look at the charts, but the stock didn't follow what the company execution was doing till later on in the year, maybe 2 or 3 quarters later. But what I like to do, like I said, when I have a company destroy earnings, I want to check the last few quarters, take a look at the stock. If the stock didn't mimic the actual execution, that's when I want to trade it. That's because the market is not saying what I'm saying. So that's what you want to do. I hope this all helped you out. If you guys have any ideas, please chime in. I know it's a long video, but like I said, it's important for you all you guys. And if anything, just skip this video. I'm trying to help you guys out. I'm not charging anything. I don't want to make anything, but I do want an opportunity. All right, video 1.